was able to say, so we are doing bookkeeping, and welcome to our today's session. I remember I was able to share the notes for bookkeeping in our WhatsApp group. And the most important aspect here is to understand on how you are going to be managing maintaining a proper and efficient bookkeeping within the organizations, and how are they important in the delivering an efficient and effective services to our customers. Now, we are saying that the cost bookkeeping just is a system adopted in recording cost information in the books of accounts. And you know very well that we normally have two types of these accounts. We normally talk about integrated. We normally have integrated system. And then number two, we normally have non-integrated systems. Non-integrated systems. Now, this one is normally called interlocking. That one is interlocking. So that is where we are discussing about non-integrated systems. And in this aspect, when you look in integrated systems, it's just the systems whereby both the financial and cost accounting systems are maintained in one set of books. So in this case, you find the financial. This is where the financial and cost accounting are maintained in the same set of books. So that is what we discuss about integrated. When you look on your notes, you'll be able to find the features or advantages of integrated system together with the disadvantages. Now, when you look on the double entry in integrated accounts, we know that when we were studying our financial accounting, we were able to understand that in any transaction that we are going to be doing, it is going to be affecting two accounts. For instance, when you are going to be recording the purchase of the material from the supplier, so if it is a supplier, remember you have more materials, so you're going to be debiting the material stores account, and then you credit the cash because you went to withdraw money. Once you withdraw, remember there is a reduction of the total money that you have in the bank, and that is why you credit the cash or bank. You need just to be understanding that all the assets are normally debited, so the balance brought down for all the assets are going to be debited. And for the liabilities, you are going to be crediting. So I was able to share all that information with you. I will just be giving a simple illustration there. When you look on an integrated systems, you normally find is a system of recording cost information in a separate set of accounts. So this is the system of recording. Cost information. The system of recording cost information in a separate set of accounts. Right? Now, in this case, we normally look on aspect where the financial accounting and cost accounting records are maintained separately. And we are saying that in this case, therefore, separate profits will be reported, which are normally different. And you can be able to ask yourself, what might be the causes of these of difference in profit between the financial and cost accounting systems? And one of the key aspects is the pure financial expenses like bad debts and loss or disposal and current assets to etc. Number two, you will be able to find that the provisions appearing in the financial accounting only. For instance, you can find the provision for bad doubtful debts. We are discussing about the provision for contingent liabilities, But when you look on number 3, we are discussing about the pure financial incomes. And these are the gains of disposal, decrease in provision for bad or for debts. We have the discount receipts, among others. But you normally also find another cause, the notional charges in the cost accounting, depreciation charges, difference in stock valuations, overstock and absorption of overheads, among others. Now, in this aspect, I just want to look on the reconciliation statement under the non-integrated. So reconciliation. Let us look on the reconciliation statement under the integrated systems. So in this case, how am I going to be doing this? In this case, you are going to be looking on having 2 columns here, right? So we are going to be having our columns looking like this. And we start with the profit as per the financial statement. As per the financial accounting or financial accounts, we are going to be opening, putting them there. Then we add, in taxation, we talk about the disallowable, but here, we are not talking about the disallowable. You look on the depreciation in financial accounts. The depreciation in financial accounts, you put it here, right? Now, the next one, we are going to be having appropriations of profits. Appropriations of profits. You put them here, right? We have under absorption. We have under absorption, which we put also here, right? We also have discount allowed. Discount allowed, which you put it here. We have loss on disposal. Loss on disposal. The loss on disposal, we are putting it here, right? Then we have overstated opening stock. Overstated opening stock, you put it there. We have understated closing stock. Understated closing stock also, we put it here. Those are the things that you normally add back, right? Now from there, we less the opposite now of what you are able to add. For instance, you can look on understated. We look on understated opening stock. We put it here. Remember the additions, you're going to be putting them here. Now we have overstated closing stock. Overstated closing stock we put there. We have depreciation in current assets. Depreciation in current assets, you put it here, right? We have overabsorption. You put overabsorption here, right? We have discount received. Discount received, you put it here. We have gain on disposal. Gain on disposal, you put it here. What you're going to be getting as your total here will be the profit as per cost accounts, right? That is how you do the questions of integrated systems. That is how you do the questions of integrated systems. Now, I just want us to focus our attention to. I start with the question which I shared in our WhatsApp group. You can be able to open it. There is a question which I shared there, right? So I will be able to start by doing that question, and then I will just be doing 2 questions for an integrated system as we complete our course bookkeeping. So let us go to our questions here. This is the question which I shared And Joe, you can read for us. Joe, you can read for us, please.
Yes.
Move on.
The foreign balances were provided in the cost ledger of GDR Limited, a manufacturing company as at 1st April 2003. Debit credit, store ledger control account 250,000, finished goods control account 350,000, work in progress control account 120,000, cost ledger control account 720,000. The foreign transactions took place during the year ended 31st March 2014. Wages paid, direct wages charged to production, indirect
Before
wages
we go
charged.
anywhere beyond that, you need to be understanding that the following balances will provide the cost ledger of a minute, please. Can you reshare kindly? Can you go to WhatsApp and reshare our link? Because I can see there is a student who is looking for us and we can't find her.
Okay.
Now let us proceed. I can see the examiner is providing you, right? The examiner is able to provide you with two things here. The examiner is providing the following balances at the beginning of April 2013. He has given you the debits and credits. And it means if I want to do this kind of a question, I'm supposed to be starting by opening these accounts, the four of them. You start with the material stores. You can see there is a material ledger control account there. We have the finished good control account, the work in progress control account, and then we have the cost ledger. Basically, it is a creditors account. Now, when we go down there, there is a transaction which took place during the year, and they are going to be affecting our ledgers by posting them to the respective ledgers. Now, when I look on the other aspects, you are going to be finding that there is those are also the transaction. We have the finished goods sold. We have the set there. But the required, we have been told to prepare the necessary accounts in the cost ledger. Almost 14. And the 14 marks, we are going to be looking on our trial balance is at that 1st March 2014. And when you look on the trial balance, when you are doing your financial accounts, it is basically if, for example, the balances, the closure of your accounts that you have already opened, if they are appearing in the debit, in the trial balance, it is going to be, you are going to be crediting them and vice versa. So that is very important and key information. So in this case, let me allow me to open the four accounts. The four accounts. I think you have the question in your WhatsApp group. We don't have challenge there. So in this case, I'm just going to be opening the first four accounts. And as per the question, the four accounts, we have the material stores accounts. We have the material stores accounts. We have the material stores account. I just opened it here, right? That is the material stores. The other account I could see as per that information is the finished goods. Finished goods account. Right, I just opened it there. Then the other one that I can see, we have the work in progress account. the work in progress account, I just be able to fix it on the far end there. Now, the other account that I can see, we have the creditors account. We have the creditors account there given, right? We have our creditors account. So when I look on the balances are on the balance brought down on the debit side. So here I have balance brought down. I know that you are seeing my board. Balance brought down for material stores is 250,000. Right? Now, when you go to the finished goods, the finished goods balance brought down here, the balance brought down is 350,000, right? From there, we go to the work in progress account. The balance brought down as per the question is 120. 120,000 there. When you come to the creditors, you can see it is on the credit side. So I have said all the credits are all the liabilities are normally credited. And there we talk about balance brought down, which is 720,000. 720,000 there. Now let us go to the transactions which took place during the year. And I can see the first transaction that took place during the year. I can see there was a wages paid. Wages paid. And in this aspect, you just basically understand that if we discuss about the wages paid, where are we going to be getting money? You open here, bank account, right? So that you can be able to withdraw our money. And also, you're going to be opening wages account. Wages account here. Wages account. So in this case, I have to be withdrawing money from the bank. And that it means I have to credit the bank account with wages. Totaling to, I can see it is 400,000. 400,000. And then here, we discuss about bank. You have now enough money to pay employees. So I put there 400,000. So that is where we are discussing about the bank. I have withdrawn money and debited my wages account. This is what we discuss about the contra entry. Now, when we go to the next one, we are being told the direct wages charges to production. And when we look on the charging when you look on that aspect, direct wages charges into production, it means you are going to be crediting the wages account to affect the work in progress because you're going to be charging in the production. So it means that the work in progress account, you need to be having enough money to pay the people who are working here. And it means here, I just need to be crediting with the work in progress account. Work in progress account amounting to 250,000 because you have enough money. And then now you say, I have enough money to pay my employees, yeah? 250,000. 250,000 like that. Now, when I proceed to the third one, I can see we have indirect wages charged to production. And remember when we discuss about the indirect wages amounting to 100,000, we have to be opening another account called production overheads. Production overheads, yeah? Because when you look on the indirect expenses, they normally affect indirect. When you look on the overheads, they are indirect expenses. And in this case, when I want to record that transaction, I just come here and I say, I'm taking that amount to the production overheads, amounting to 100,000, right? And then you debit here with wages, right? Over 100,000. Always compare between the direct and indirect wages. It is well explained in your notes. When you look on your notes, is well catered for there. Now, let us move on to we have what? We have wages paid to office staff, right? Wages paid to office staff. So it means I have to be crediting here with office staff. Was paid 50,000. Where are you going to be taking this money? To the office staff account. Office staff account, right? Which is looking like this. And you debit it with wages. which is 50,000. The wages, which is 50,000 there. We have the material purchased. And when we look on the aspect of purchasing a material, I said you need to be crediting the bank account because you are going to be buying the materials. So you credit it here with the material stores. So I just want to talk about the materials. We were able to purchase materials worth 500,000. So I just say materials 500,000. And now you have enough material here. You say, I have received some money from our bank amounting to 500,000, right? Which is going to be increasing our materials, by 500,000. We have materials issued for repairs. And remember, this is the thing that it is going to be circulating within the organization. So the material that you're going to be issuing for repairs, you take them from the material stores and you take them to the indirect expenses here. So material for repairs. Material for repairs amounted to 100,000. And then here we are going to be discussing about material worth 100,000. Worth 100,000 there. We have material return to vendor. Material return to vendor for 50,000. So in this case, remember, our vendor is our creditor, right? So in this case, you have returned the material. You credit this account because you are removing the material to the vendor. So in this aspect, we are going to be reducing our materials. So it means, here just write creditors, 50,000. And here we are talking about materials, 50,000 here. 50,000 there. Now, let us go to the material return to store for production. So where this material coming from? So it means the material which we are returning we are returning the material from the work in progress, because here is where the production takes place. So the material which are going to be returned here, right? It means I'm going to be crediting here with materials worth 60,000, right? 60,000 there. And then here we discuss about work in progress account, about 60,000. So because I have increased the number of materials in my stores, so that is where I'm debiting this account. I have taken some materials here. It might not be being used today, and take them to the material stores. Now from there, we have the material lost on fire, right? Material lost on fire. What are you going to be doing? I'm going to be creating the material stores to remove them because they have already been lost. So the material lost on fire is 80,000. You credit here, material lost. Material lost amounting to 80,000. 80,000. And then you might be having a material lost on fire here. Material lost account, right? Which is looking like this. So I debit here, right, with the materials worth 80,000. Worth 80,000 there. Then from that one, we talk about the production expenses. So how am I going to be paying my production expenses? I go straight away to my bank, right? I say I need some amount for production expenses amounting to 200,000. So here we are discussing about the production overheads amounting to 200,000. You need some money. Then come here and you say, now we have enough amount. We have received some money amounting to 200,000. So we have enough money now to continue with our production overheads. Now let us continue here discussing about production overhead recovered of 350. So if they have already been recovered, it means these are the materials which are being done here, right? They are being recovered. Where are you going to be taking them? Because we have been told the material, right? The production overhead recovered. So you're going to be discussing, it is going to be affecting the work, the production overhead and work in progress. So you just will say work in progress, right? Work in progress there, amounting to 350,000. You have enough materials here to produce now. So the production overheads amounted to 350,000. 350,000 there. Then we have administrative expenses, and a bank utoe pesa if you have issues with admin. So hapa nakuja nasema admin expenses, right? Admin expenses, I just want their money. Amounting to 110,000. 110,000, right? 110,000. So there are some of the accounts which I just want to close because they are not affected by any transaction like this one. So here we talk about the balance carried down will be 50,000. This is already done, right? Now here it just discuss about the balance carried down, which is 80,000. You just want to close the two accounts. They are not going to be affecting anymore. So let me close them because of my space, right? So let me open administrative expense account. So admin expense account, we have it here, right? So we are discussing about having some money from the bank in regards to administrative, amounting to 110,000. You debit the administrative expense account. Now from there we go to the administrative overheads absorbed, right? Administrative overheads absorbed. Where are they going to be absorbed? We talk about to the production overheads. When you heard about the absorption, take them to the production overheads. So here you just come and credit production overheads. 162,000. Then you come here, you say, I have some admin money here. Admin amounted to 162,000. Amounted to 162,000. Now we have about goods finished during the year, right? Goods finished during the year amounting to 700,000. And in this case, it means you have already finished producing them. Take them to the finished goods account for the work in progress. So it means here, I just need to be creating the finished goods with 700,000. And then you debit here with work in progress account amounted to 700,000. Because now you have some goods which were finished, you take to the finished goods account from the work in progress account. From there, we have the selling and distribution expenses. Go to bank and withdraw that amount. So selling and distribution. Selling and distribution amounting to 180,000. Selling and distribution. You go and withdraw your money from the bank. Come here and open the selling and distribution. Selling and distributions account. You open it here. So we have the money from the bank to cater for that. Amounting to 180,000, right? 180,000. Now from there, we continue. We have the selling and distribution cost absorbed in the cost of sales. Now in this case, when you look on that aspect, it means I have to be opening the cost of sales account, right? So we are just being told straight away that there is a selling and distribution cost which are being absorbed, right, to the cost of sales. And I said when you hear about absorption, you take them to the production overhead, sorry. So in this case, I just say, let us take this amount to the production overhead because they were just absorbed. 200,000, take them here, and let's talk about the selling. The selling amounting to 200,000. Selling to 200,000 here, we take them to the production overheads. Now from there, we have the finished goods sold. The finished goods sold, the finished goods sold. Now the finished goods sold, which account is it going to be affecting? Now in this aspect, we are going to be opening the cost of accounts, the cost of sales account. But before we do that, let me close these accounts. So when I see here, the balance, my creditor side is greater than the debit side. So the balance carried down will be here. The balance carried down will be how much? 20,000. Yes. That is the balance carried down for selling and distribution. What about for admin? The balance carried down will be on debit side, right? Amounting to how much? This should be around 52,000. So I have already closed those two accounts. I have balanced them. So let me just close them so that I can open two more accounts. So the two more accounts we are going to be having the cost of sales account. So you have just been sold. There are some of the finished goods sold. So I just come here. I credit with the cost of sales, right? Amounting to 600,000. Then already it is going to be affecting the cost of accounts, cost of sales account. So just talk about the finished, amounting to 600,000. Amounting to 600,000. Then the last one, it is the sales account. And you can see there are some of the sales that we've made. So when we do our sales, tunapelekanga pesa wapi? So when you have the sales account here, pesa unapelekanga bank. So in this case, I credit my sales account with bank. Nipeleka pesa bank, amounting to 1 million, right? And then I debit here, right? Sales. Pesa imeingia kwa bank, 1 million, sorry, 1 million. 1 million. So from that aspect, you just start by balancing your books. You start balancing your books. And I can start from here, right? We can start from there by balancing your books. So we have 250 plus 500 plus 60. That is 810, right? That is 810. So we say here the total is 810,000. What about here? So it means the balance carried down falls here. The balance carried down falls there. By subtracting how much? I can see that is 230 minus 230. Right? And is it 230? Right? Let me see. What is the balance here? We have 150. There might be some production. There's some transaction which we did not record there. Let me see it because it should be somewhere. There must be something that I was able to skip somewhere. The material issued to production, I have not recorded it anywhere. So the material that is going to be issued to production, right? So we take them here. So we talk about the work in progress of 350,000, right? And then here, we are going to be issuing them. So we take them to work in progress. We have our materials, 350. None of the transaction is remaining now. Let us close our accounts here. So it will be 810,000 minus 350,000 minus 80,000 minus 50,000 minus 100,000. I'm getting a balance carried down of 230. So also the total here should be 810. The balance there should be 810. What about the finished goods account? Right, the finished goods account. We are going to be having the totals here, which is totaling to 50,000. So what is the balance carried down here? Right, the difference is 450,000. So this is 50,000. That is 50,000. When you go to the work in progress account, right, the balance carried down falls here. So the balance carried down. So in this case, we have 350 times 2, that is 700, plus 250, plus 120. We are getting 1070,000. So minus 60, minus 700, getting 310 is the balance figure. So the total here is 1070. Now let us come here. The balance carried down falls here. The balance carried down falls there. So 720 minus 50, getting 670,000. So we are getting 720,000. And also here, 720,000. Let us come to the production overheads. We have 200. I can see it's 100 plus 100 plus 200 plus 162 plus 200. We are getting 762,000. 762,000 is the balance, is the total here. 762. Now, what is the balance carried down here? The balance carried down minus 350, which is 412. So the totals here, we have 762,000. Now, when I look on the finished, the cost of sales, right? The cost of sales, the balance carried down here, very simple, will be 600,000. And then after the balance carried down for sales will be 1 million. Now, what about for the bank? So what is this total? I can see it's more than our debit side. So this will be totaling to how much? I can see we have 900 there, plus 200, plus 110, plus 180. Totaling to 1,390,000. Now, the balance carried down of ours here will be 390,000. 390,000 there, totaling to 1,390. You see how I'm balancing my accounts? Then we go to the wages account. Wages account. In this aspect, you can see this 400 and this is less, right? Even it is totally, because this 400, this is 400. This accounts closes itself. It doesn't have balance carried down. So this 400, this 400. It closes like that. That is how you normally prepare your relevant ledgers or relevant accounts. Now from there, I just want to do the trial balance. The trial balance is how these accounts are going to be appearing for the next financial year. For example, you can see the balance carried down is on the credit side here for the work in progress. For the next year, it will be the balance brought down here. So how do they normally appear? So in simple terms, the way they are appearing here, you take them differently when you are recording on your trial balances. So this is what I mean. This is what I mean. This is what I mean here, right? So trial balance. Trial balance here. So we are discussing about having our debit, credit, and we are going to be recording all our transactions that we have already made. And in this aspect, I remember we started with material stores, where the balance brought down was on the credit side. So the material store, the balance was 230. So we record here on the debit side, because pale kwa ledger ilikuwa on the credit side. When you go to the second transaction, which was the finished good, the balance carried down, we got on the credit side, amounting to 450. So we record on the debit side. Now, when you look on the work in progress, the balances, we got them on the credit side, and that is what I was explaining. 310,000, right? 310,000 you record on the debit side. When you go to the creditors, we got them on the debit side. Now you record them on the credit side, 607,000, right? Now, when you look on the bank, you got it on the debit side. So when you record on the trial balance, you record on the credit side, was amounted to 390,000. 390,000. When you go to the production overheads, you got it on the credit side, amounted to 412,000. You record it on the debit side. When you look on the office staff, was on the credit side. So here you record on the debit side, 50,000. Right? When you go to material lost, it was on the credit side. We record here on the debit side, 80,000. Now let us proceed to admin expenses. Admin expenses. So our admin expenses, we got them on the credit side, around 52,000. So you record them on the credit side. And when you look on the salary, selling and distribution, we were able to get it on the debit side. It is on the credit side here, 20,000. Then the last thing that we were able to know, the second last, the cost of sales. Our cost of sales was on the credit amounting to 600. So here you record on the debit side, right? Then we have our sales, which you recorded on the debit side, the balance brought down, then it should be on the credit side, 1 million. The trial balance balances itself. It does not have balance carried down here. So in this case, if we'll be able to do it very well, you'll be able to get at 21,32,000, 21,32,000 like that. 21,32,000. That is how the trial balance looks like. That is how the trial balance is looking like. Now, from there, I just want to do a different question from this one for 2014. I just want to look on a different question tested, for instance. When you look on a question which they brought on November 2017, I just want us to go there to check on November 2017. November 2017 here. November 2017. November 2017. Right. So November 2017, somewhere here. So that you are not going to be having hard time when you are doing your management accounting. So when you look on this question here, right, November 2017, we have question number 3C. Someone to read for us. Farah?
Jundi Limited maintains separate cost and financial ledgers. The accountant has provided the following opening trial balance in the cost ledger. Cost ledger opening trial balance. Financial ledger control accounts 249,520. Work in progress control account 125 to 10. Finished goods control account 85,150. Store ledger control accounts 39,160. Additional information. During the period, total sales amounted to shillings 375 to 90. Total purchases, wages, and overheads amounting to 292,860. At the end of the period, the store ledger and work in progress control account had the same value as in the opening trial balance above. The closing balance on the
closing balance of the financial ledger control account was 212,420. Required the examiner wants us to calculate the profit for the period, and then number 2, the examiner wants us to come up with a closing trial balance for the period. Now, in these aspects, and I just wanted to be able to understand it. Already the examiner has given you the trial balance that we have already calculated, and it needs us to get the profit for the period. And I'm going to be opening the financial ledger control account so that I can be able to determine the profit as per the information provided. Right now, number 1, because I'm going to be getting good marks, this is what I'm supposed to be doing under number 1. Under number 1 here, right? So when I'm calculating the profit for the period, I'm going just to be looking on the financial ledger control account. We have talked about the financial ledger control account. Financial ledger control account here, so that I can be able to determine the profit for the period. I just want us to come with the profit for the period. So the financial ledger, when I look on the aspect of this question, we are being told the financial ledger control account, when we look on the trial balance, the balancing figure or the opening amount is on the credit side. So I'm going to be taking them on the credit side. It will be the balance brought down here. The balance brought down, it will be how much? As per the question, we are being given 249,520. Then here you have to be taking your balance carried down as per the information provided. Your balance carried down will be how much? So examiners provided you with a good information, additional information number 4. The closing balance of the financial ledger control account is 212, right? 420, like that. Now, what is going to be affecting our financial ledger? One will be basically the sales, and our sales, we are going to be recording them here. So let us record our sales here. So as per the information provided there, we are being told that during the period, the total sales amounted to 375 to 90, 375 here, to 90, right? 375 to 90. Then there are some of the costs which are affecting our financial ledger. We are being told the total purchases, right? And additional information too. The total purchases, wages, and overhead amounted to 292,860. Costs. I just say cost here. It is 262. Examiners talked about 292,860. 292,860. Nothing else that is going to be affecting our financial ledger. What I just need to do is to calculate my profit, which will be my balancing figure. My profit, which is going to be my balancing figure on that credit side. On this credit side, I'm not here. So this is amounting to how much when I do the total in there? It will be 375 to 90 plus 212, 420, right? I'm getting 587, 710. So here also should be 587, 710. Subtract the balances or the cost ledger there. 292,860 minus 249,520. Getting 45,330. 45,330. Imagine hivyo ndio uko na marks yako 5. That is what you are supposed to do to get your 5 marks. Now, let us come out of this. And we go to we do part 2. Part 2, the examiner wants us to calculate what? Part 2, the examiner wants us to come up with a closing trial balance for the periods, right? Closing trial balance for the periods. Mimi nakuja hapa namwandikia title very quickly. We are talking about Judy Limited. Judy Limited. We are discussing about the closing trial balance. Closing trial balance there. And you know your trial balance should be having debits and credits. Very simple. So I'm going to be having my debits there. We have our credit there. Now, the examiner has already given me. The balances carried down when you look on the how I was able to record the balances for our financial control account, they were on the debit side, they carried down, amounted to 212,420. So those ones we are going to be taking them on the credit side. I just say financial ledger control account. It is on the credit side because on the ledger itself, it is on the debit side. So here on the trial balance, you record in the credit side, 212,420. You record it there, right? Now, when you look on the stores ledger, these questions are always very simple. When I look on the stores ledger, as provided by the examiner there, it is on the credit side. If it was because on the first trial balance, it is on the debit side. So here also you record the store ledger on the debit side, 39,160. That's 9,160, right? Then we also have work in progress as per the question. So the examiner has given us the work in progress account, 125 to 10. I just recorded the way it is, So I just copy paste, imagine, 125 to 10. the way tu inakaa kwa swali. Hiyo ingine naona ilikuwa nani ya pale? Tulikuwa na nani? Tulikuwa na nini? We had so nothing else is going to be affecting our account there. So the only thing that I just need is to balance the two accounts, where I'm going to be getting the finished goods control account, because the finished goods are going to be affected by the financial control account. So under the first financial control account given by the examiner was 85,000, but that is not going to be our case here. So when you balance here, what you're going to be getting is the finished goods account, which will be our balancing figure, by the way. It will be by our balancing figure because it's going to be affected after each financial period. So at the end of the period, it cannot be the same. So 212,420. Hapa tuko na 212,420. So what is our balancing figure? I just say 39,160 plus 125,210 minus 212,420. We are getting 48,050. That is how you are getting your marks. That is how you are getting the whole marks for coming up with the trial balance. The reason is I have not recorded the 85. Kama ningeweka 85 hapa, you see the trial balance could not balance. So the only thing you need to understand is the finished goods are going to be changing time after time, because every year we are producing, releasing some finished goods for sales and so on. Now from there, I just want to do our last question for this aspect of cost bookkeeping as we close it. As we close this chapter. There is a question in November 2015 there. There is a question in November 2015, question 1C. There is a question there. November 2015, question 1C. November 2015, question number 1C. I think we are moving well. So let me see this question here. Joy, can you read? See if she's not ready to read. Let me read. The net profit of Pine Limited, a manufacturing concern, for the year ended 30th September 2015, as shown by the financial accounts, amounted to 257,510. The cost accounts for the same period disclose a net profit of 344, right? 800. On examination of both sets of accounts, the following facts were discovered. We are being given number 1. Production overheads under recovered in cost accounts. Administrative overheads over recovered in cost account. Depreciation recovered in cost accounting and financial accounts. We have interest on investments not included in cost accounts. Obsolescence loss charged in financial accounts. We have our income statement, our income tax provided for in the financial accounts. We have the bank interest, the dividend received in financial accounts. Then we have the loss due, right? We have the loss due due to depreciation in stock value charged in financial accounts. Now required, we have been told there to come up with a reconciliation statement between the net profit as per the cost accounts and per the financial accounts. And the examiner is giving you 10 marks. It's giving you 10 marks, right? So in this aspect, this is what you normally do. This is what you normally do when you come across this question. If you take the balances of any either side and you reconcile, I was reading the question which I have not shared with you, right? So the question is here. Sorry for that. So this is our question. This These are the questions that we are doing, and these are the transactions which were provided. And from there, we just need to be doing our question in this aspect. This is how you do these questions. This is how you do the questions here. Now, the net profits of the Pine Limited, and this is what I just need to do. I just want to come up with the heading. I'm discussing about Pine Limited. Na hizi maswali unajisaishia kwa exam. So Pine Limited, we are talking about reconciliation statements. Reconciliation statement for the year ended 30th September 2015. So it looks like that. Now I'm just going to be having two columns here. We have 2 Kenya shillings. I have this one. I have another one here. So if you take the profit as per the cost accounts or the profit in the financial accounts, we are reconciling them. So let me take the profit as per the financial accounts. Profit as per the cost account, sorry. Cost accounts, right? Zenye nitaada hapa kama ulikuwa umeanza na financial accounts, zenye nitaad ndio na subtract. Then zenye nime subtract hapa ndio ungeadd. So it's just the same thing. So the examiner has given us the profit as per the cost accounts to be 344, right? 344,800. Then you say, let us add back some of the transactions which took place during the year, right? We add back, right? One, the thing that I'm going to be adjusting I'm going to be adding back as per the cost accounts. We are going to be discussing about administrative overheads. Administrative overheads recovered. Administrative overheads recovered, amounting to 3,400. The other thing I can see under those transactions is that not depreciations. We look on the bank interest. I can see there was somewhere with bank interest and dividend receipts. They are just like incomes. So bank interest and dividend received. Bank interest and dividend received were amounting to 2,450, increasing your balances of cost accounts. We also have interest on investments. Interest on investments. So our interest on investments amount to 16,000. Interest on investments amounted to 16,000. We have depreciation recovered in cost accounts. Depreciation recovered in cost accounts amounted to, I can see it is 25,000. 25,000. So let me add this. No any other transaction that is affecting the cost accounts. So just say 3,400 plus 2,450, right? Plus 16,000 plus 25,000. This translates to 46,850. Now let us less, right? Let us subtract the other transaction now, which are remaining there. Number one, I can see we have production overheads. Production overhead there, given, amounting to 6240. Now, the other one will be administrative overhead. We have already dealt with it. We have depreciation charged. Depreciation charged. Depreciation charged in financial accounts. So the depreciation charged in financial accounts amount to 22,400. 22,400. We also have interest of obsolescence losses. Obsolescence losses were amounting to 11,400 as per the question. Next, we have income tax, income taxes. Right, income taxes was amounted to 8,600. 8,600. Then we also have the losses due, losses in stock due to depreciation. Due to depreciation. The losses in stock due to depreciation amounting to 13,500, 13,500. So how much is this? 6240 plus 22,400 plus 11,400 plus 8,600 plus 13,500. I get 134. Right? What am I getting here? We talk about 344,800 plus 46,880, then minus my answer. We should be getting 257,540. 257, is it 540? Let me see where I was not able to add it, right? 46,850, 344,800. 134, 140. So how much am I getting? 344, 800 plus 46, 850, 391, 650 minus 134, 140. It should be 157, 510. It should be 10 there. So when you look as per the question, the profit is per the financial accounts. As per your question, the profit is financial accounts, walikuwa wametupea 257,510. So that is how you are supposed to be reconciling between the profit as per the cost and the kama ningeanza na profit hapa juu, ningeanza na profit as per the financial accounts, I could already added all this to the profit as per the financial account given by the examiner. Then I subtract the aspects which are affecting the cost accounts, and I will be able to get the profit as per the cost account. The interpretation should be always the same. So, but when you look at it, this answer is given in your question. This is given in your question. Whether you start with the profit as per the financial account, whether you start with the cost account, you are supposed to be getting either of the profits, whether it's for the cost accounts, whether it is for the financial accounts. Any question? Any question now? Any question? Any question? Now, tomorrow we are going to be doing variances, which are not applicable to Boniface. Boniface, tomorrow you are not attending our classes. Now, because tomorrow we are going to be doing variances and they are not applicable in ATD, wewe utatungoja tufike kwa costing methods. Sisi sasa utaendelea na kurevise. Kwanza tukimaliza the standard costing, which are variance analysis, tutashift our gears now to our last topic, which is the process costing. And I think it should be done on Friday morning. Friday morning there. We are going to be doing we are going to also to be doing that topic. If we are going to be managing to finish, but we should be, we are going to be finishing our variance analysis tomorrow. So that on Friday we start the process costing, because we know very well the costing methods as easy issue with one day. If I want you to understand. So I'll just be teaching them on Friday. Saturday I'm not there, and then Sunday morning we can close our journey. We can close our journey. Any question?
Dan, is this part of what I am supposed to be doing? What to discuss today?
No, I'm talking about tomorrow. Tomorrow wewe utafanya variance. Kesho wewe una class kwanza. Wewe utatupata huko on Friday. Friday ndio tutakuwa tunafanya costing methods. Lakini sasa hii kwa applicable kwa syllabus yako. Variance asiko kwa syllabus yako. Sawa?
Okay.
Yeah.
Mwalimu, hii bookkeeping iko kwa syllabus?
It is, yes. It is topic 5 in your syllabus. And go and check there. Why is it not in your syllabus? And you can see we are doing it. You can see there are questions there. Nothing was revised, by the way. Don't be intimidated ama kudanganywa pale nje. Nothing they revised. They just shifted the units. Hakuna kitu wali revise. Hakuna kitu wali revise eti kutoa units eti watoe topic, watoe. No, they did not do that. They just shifted the topics and they interchanged. Topics zenye zilikuwa the units zilikuwa juu zikakuja chini, zingine za chini zikaenda juu. Just like that, but they did not revise the syllabus. Eti nitoe hii topic, hii haitoki namna hiyo. They did not do that.
Okay, sawa.
Yes.
Alafu hii video pia ushare